Let's now welcome in Dipan Mehta. He's joining us in the conversation to go through this whole raft of earnings that we've gotten over the last 24 to 36 hours. Dipan, great to have you on. Thanks so much. Let's start with Tata Motors first. Obviously, there's pressure, there's weakness, but they're still, of course, retaining their guidance and all their targets on JLR. How would you look at the stock? Dipan, you're on mute.
Sorry about that. So good morning, Sulbi, and thank you for having me on your show. I think more or less in-line numbers, but look, there's so much of volatility in Tata Motors earnings, and that does tend to affect the investors' mind. So generally, I would say that Tata Motors is avoided. As compared to some of the other auto companies, I think there are better bets over there. Maruti came with a good set of numbers, better than what I expected. And looking forward to Eicher Motors numbers, I think, which could also be very good. And then, of course, there's M&M as well, which has done exceptionally well, better than Tata Motors as well. So within the auto space, I think there are better choices. But on the whole, the industry is under a bit of a pressure and volumes are still not picked up. So I would not like to, increase exposure to the auto sector. Tata Motors in specific, I think better to switch out of Tata Motors and some of the other companies which I just named just now.
Okay. So, just to expand on that point on auto, and since we're talking four-wheelers, Dipan, now Maruti in the con call didn't offer too much comfort. I mean, they're being brutally honest, saying that demand is sluggish and slow. And perhaps, we won't expect too much of a blockbuster revenue growth. So would you look at anything else in four-wheelers, or is it better to look at maybe the two-wheeler makers?
See, I think first of all, you need to be neutral to underweight auto, but I think it's an important industry. It's a cyclical industry as well, and I think it's hit a soft bump at this point of time. So eventually it will get over this sort of slow period. Also with increase in liquidity in the banking system and hopefully interest rate cut, that certainly will benefit the auto industry as well. And they're moving very strongly on the export market and whatever they are selling to Toyota as well. So that's acting as a bit of a buffer for Maruti. I think valuations are reasonable, around 25 times trailing 12 month. I think it's a reasonable valuation. At a time when the earnings can pick up maybe 4 to 6 quarters down the line, if you have like a 2-3 year type of a view, I think it may outperform the market. And M&M also, I think if you look at the kind of strategy which they have in the EV space, it's the best in class. And here also they have the benefit of the tractor business, which has got higher margins. And that also is doing pretty well for the company. So within the auto space, I would say in the four-wheeler, these are two companies which may outperform. But on the overall industry, the view has to be slightly cautious for the next 2-3 quarters, maybe a little longer as well.
As Dipan, thanks for waiting by. Wanted your view on Bajaj Finance. That one did nothing much for the last couple of years. And in 2025, actually, it's showing signs that, hey, I'm the one that has the pedigree, I'm the one who has the class, and I'm the one who's going to, do better in 2025. Can it be the outperformer? How do you like the numbers?
Yeah, Nigel, first a disclosure that it's one of our core holdings and very impressed with the numbers. Whichever way the stock may open today, I can't say. But, the real number to look out for is the provision amount, and which was growing at 2 or 3 times the previous quarter. I think we have seen 60-70% increase over the last quarter, and hopefully that will start to flatten out. And you may see in the next 2-3 quarters or so, the top line matching with the bottom line, the growth rates. And that will mean that the earnings per share can easily grow by above 20%, more like 20 to 23% or so. And that, in my opinion, should cause a re-rating of the stock in terms of its valuation multiples as well. So within the BFSI space and the banking space, I think this is one stock which can clearly outperform. But as I said, our views could be biased because we have an ownership position. And in my opinion, I think from a safe and from a risk return profile, it could be the best NBFC stroke bank to be invested in right now.
Got it. All right. Anything else, Dipan, that you would like to highlight for us? We've got a lot of numbers from the broader markets. The EMS stocks bounced back yesterday. Some of these solar themes, they have got, hit hard. But some of them are making renewable energy stocks. They're making a bit of a comeback. Your view on any of them?
No, Nigel, I think that whatever numbers are coming through over there are pretty okay. But there is a nice trend happening in the chemical sector, especially specialty chemicals. And after several quarters, we are certainly seeing green shoots over there, and this is certainly not what I expected. Like SRF numbers were pretty impressive. Deepak Fertilizers came with a very good set of numbers, and a lot of other specialty chemicals, API, intermediate companies have reported decent numbers. So I'm just looking at that sector more closely now. It's got some amount of cyclicality in it, but I think we may be seeing an upcycle over there. So it could be something quite interesting maybe going forward, especially when you're looking out for sectors where there is still growth left, and there are very few such sectors at present.
Indeed, that's an important point, because if I look at the entire basket, it started showing some growth, and in the next few quarters, it will have the benefit of the smaller base. So that's what will further enhance that growth that we're looking at. Appreciate you joining in, Dipan. Very pertinent point you make out there. Wishing you a good day ahead. We look forward to chatting up with you in the next couple of sessions as well. Prashant.